Silver would be $200 an ounce. Wouldn't surprise me in the next 6 months. I think we're technically set for that. All the metrics I look at say, if you're not in, don't come back in 6 months.
Is going to be the big, big, big surprise in 2026. And silver is part of that story. The whole of the situation is an enormous squeeze. And that, I think, is the initial point about where the silver price is going in depreciating fiat currencies.
Silver rose above $61 an ounce, continuing an intense surge that has swept world metals markets in 2025. The surge is only 24 hours after the metal broke the $60 mark, the first time in history, due to tightening supply, high borrowing rates, and aggressive speculative bets on Federal Reserve rate cuts. The market has increased more than twice in 2025, which is much higher than gold, which has earned 60% in 2025 year to date. Alasdair Macleod and Michael Oliver are of the opinion that the historic run of silver is only beginning, since decades of price suppression has left the silver at a stage where the upward pressure cannot be held. The two contend that the 60 is merely the tip of a gigantic iceberg that is soon to submerge faith in fiat currencies and assist usher in a new monetary world, in which precious metals will be the new masters. Let's dive into today's video to uncover some valuable insights. Don't forget to subscribe and hit the notification bell so you never miss an update.
I think silver's having a tantrum and is going to move into a new price reality, meaning it's not going to go incrementally. It's going to go to what you would call a actual fair value. If you want to divide the price of silver into gold, go back 50 years and look at the screen. We're very cheap. You even go to some normal values we saw over that 50-year span, or where silver was in the bull markets of 80 in 2011, relative to gold, that is. Silver would be $200 an ounce. Wouldn't surprise me in the next 6 months. And this kind of event has happened before. It's not like I'm predicting something weird and off the page. Copper did it in 2005. Lead did it in 2007, where they were in a range for decades. And they said, enough, boom. And literally in a couple of quarters, they quadrupled in price. Separate events, not base metals, just them. So, I think we're technically set for that. All the metrics I look at say, if you're not in, don't come back in 6 months. Silver is going to be the hot potato. There's no question about it. And it wouldn't surprise me that, silver back in 1980 in the surge then was 6.5% of the price of gold, 1 ounce to 1 ounce. And in 2011, it was 3.5% price of gold. Right now, we're 1.4. Okay. Why, if silver has already broken out of this 50-year decade of lethargy or suppression, might go up quadruple, you can bet that spread might too. Maybe those old highs on the spread relationship will come out as well. Meaning, hey, the high we made in 80 and the high we made in 2011 on a relative basis to gold, even those are coming out. In which case, you do the math. Take silver to 6, 7, 8% of the price of gold. Don't be surprised. In other words, it's a rational move for silver to do what it's doing now, because it was irrational of it to stay suppressed for so long. And it's now saying, out of my way, and it's not going to observe the norms of market behavior. This has happened with other markets. Copper did it in 2005, quadrupled in a couple quarters, and lived in a new reality after that. Lead, same thing, 2007. Lived in a multi-decade range, and quadrupled in price in a couple of quarters and lived in a new reality. Yeah. If they can do it, silver can do it, okay? And why didn't silver do it back then? Brings up that question again about suppression. Anyway, it's a tantrum, but it's a reality-based tantrum, and it will behave like a tantrum. Don't expect normalities. And the public will swarm after silver.
The whole of the situation is an enormous squeeze. And that, I think, is the initial point about where the silver price is going in depreciating fiat currencies. So we're at this fascinating once-in-a-lifetime juncture as far as silver is concerned. And I think I would confirm Michael's analysis completely. I mean, he's coming at it from a completely different viewpoint. But what I see, it's just ringing true what he's saying, that this is going up, and we're going to see this in triple figures, I think, in the not too distant future. I'm not going to put a time on it, but I mean, one of the other general points is we're coming to the end of the fiat currency system, and as you come to the end of a fiat currency system, you've got to ask yourself, what is a fiat currency actually going to be worth in terms of its purchasing power? It's going to go down to zero. unless the government is sensible enough to step in and stop it. There's no sign of that at all. Inflation, if you like, in the form of rising prices, starting from commodities and going up, is going to be the big surprise in 2026. And silver is part of that story.
The most recent FOMC meeting of the Federal Reserve concluded in what most people anticipated was a 0.25% rate reduction that took the federal funds rate to a 3.50% to 3.75% margin. The Fed in its statement recognized that inflation is yet to be completely sticky and indicated that another reduction might not occur anytime soon. The markets have shifted their focus to the next press conference of Jerome Powell to get more directions. The Fed made its third consecutive rate cut, and the prices of gold increased, but its central bank did not change its prediction of a single rate cut in 2026. In the bigger market action, US dollar index is lower, and the 10-year Treasury yield is at 4.166%. Michael Oliver and Alasdair Macleod believe that we are entering the strongest stage of the gold and silver bull market. Bond yields are shattering in the world, and they tell us that the second wave will be the bubble bursting of the equity bubble and sending the money running out of precious metals. Now let's redirect our attention to the video again.
It's in an acceleration phase, and also we just got the super boost of the spread relationship breakout with the S&P, meaning versus the biggest bubble market on the planet right now, the U.S. stock market. The money flow is starting to move already, and when that asset class starts to crumble, as we think it will early in the coming year, then more money will move into gold, in which case don't look at a price of gold at 4,000 and say, oh my gosh, that's been vertical for so long. I got to take profits. First off, the two prior bull markets, the one that peaked in 80, the one that peaked in 2011, if you measure from the bear low that preceded the peak, there were eightfold gains. If we had an eightfold gain, it would be $8,400 gold. And that only matches the gains of those two bull markets. We're in a different world now, too. So I don't know where gold's going, but it's at least going to that 8,000 plus. And then you can at least start to talk about, well, this is done it a third time. I don't know where it's going. It could go to 20, 30, I don't know. But it's not going to be at 4,000. You're not going to have a situation where silver explodes and gold sits there. No, the gold's going up too, but silver's just going to vastly outpace it. I don't have a technical target.
People have got to understand it's not gold going up so much, but it's more fiat currencies going down. I mean, we're looking at this in completely the wrong perspective. The purchasing power of the dollar is going down. Now, the reason I always refer to the dollar is it's the king rat of all the fiat currencies. The situation that we have today is fascinating. Michael's referred to the equity bubble. That's going to burst. Now, what will burst it will be rising bond yields along the yield curve. Of that, there's absolutely no doubt. And I think your work, Michael, is beginning to show that this is more or less imminent. I mean, you look at the Japanese situation, German bond yield. I mean, if you look at the long end there, I mean, these are all breaking up on the upside. What we have had in terms of bond yields is a pause from around about 2022 until the current day in an ongoing uptrend. These bond yields are going to go higher. Now, the second time they go higher, they're going to crash the equity market. Of that, there is absolutely no doubt. That time is near us now.
Silver's breakout above $61 and gold's continued climb signal a powerful shift underway in global markets. Tight supply, rising bond yields, and expectations of further monetary easing are pushing both metals into what many see as their strongest phase yet. With fiat currencies losing purchasing power and equities showing signs of stress, investors are moving rapidly toward hard assets. The momentum in gold and silver appears to be just the beginning of a much larger trend. Are you planning to increase your investment in precious metals or stay cautious? We'd love to hear your thoughts in the comments below. If you enjoyed this video, give it a thumbs up and make sure to subscribe for more updates. Thanks for watching.